Good morning, everybody. This is Chrissy from SolsticeATR and Vulcan Capital Research. Hope everybody's enjoying their Father's Weekend. Happy Father's Day to all the fathers out there. And let's just take a look at the overall market from last week to the coming week from June 17th through the 24th. So we'll be covering the whole week for what the outlook would be. Today I will be covering the SPX, the NASDAQ, the Russell, and the Dow Jones Industrial Average. This is my intro always every week, having the combination of those four instruments together. And what I'd like to show you is here, let's just zoom in so that everybody can see a little bit more in detail what we were looking at from the prior last week and a half ago when we gapped up. These were the gaps in the volume profile. I kept those ovals here, so we're going to keep this one here. I'm going to eliminate this one here because it's no longer it's far away for the coming week. So what I'd like to do is just remove the ovals, remove oval, and I'm going to move that one over to the right side, remove drawing, and I'm going to put an oval on the right side. Basically this area here, which is this candle that started the whole move, and that would be the 78.2 fib. So I'm going to highlight it this way so it's long enough for us to see. We are consolidating. We pushed up. We went to the upside, the 38,300 area. We rejected that area. We came back in the last 4 days, came in, and we still holding the 50 simple moving average. This is a very important area, the 37,950 area. Keep an eye on it. If we end up losing it and losing the 800 area, we would head back down to here. And if we lose here, we go down. But I think since we are in an uptrend, I think this is a consolidation from the prior breakouts, because you remember this area was consolidation, gap, takeoff, come back down, consolidate, tried to take over, couldn't, came back in, and we stuck in this range. This range here is very important because this is like a box. If you draw a down channel from this candle here to this one, and we draw an up channel from this candle to this one, we are in a symmetrical triangle. If we lose that triangle to the downside, we end up down here. If we break out of that channel up here, we go up, continuation to the upside, and that would be my target here. Let's just put an oval on this side for the following week, so we'll keep it thin like we did at the other side. So my goal is, if everything works out, forget what's going on in Iran, hitting container vessels, sanctions on it, Middle East crisis. You have the China tariff wars as well as in their sea between Taiwan, Philippines, and that as well. Fights over the islands and the territory for that oil sector and the importing and exporting. And we got the Federal Reserve Board not tightening budget and basically making it more freer, lowering down interest rates. I think the opportunity is to the upside, not to the downside. This is my opinion. Remember, trade what we see, not what we think, and I think it's still to the upside. And what I'm going to do is grab a channel, draw it that way. I'm going to draw a channel from this one to that one so everybody can have a better idea. So these channels will keep us in line of an entry and an exit. Come down to here. Okay, that's one. And we do one from here to here. That's a kind of a good way to gauge the market, if it is above this channel to the upside, below this channel to the downside. So this symmetrical triangle is like a breakout to the upside, and I'd like to see clear this area. If we clear this area, we go up to the upside. Let's just come down to the E-mini contracts. Remember, we went from the other contract, we got the new E contract on the ES mini, and it's now the index E-mini S&P. To move new contract instead of the other new old contract that we were trading on Friday. So make sure that that contract has changed and we are on the new contract, so everybody's aware of it. We are in the same situation. If we break out that 2900 area, look for the upside. We stayed above the 2890. This is a very important area for me. We still have a down channel. I can do one, like an open channel down here like that. and we can draw one up, and this one is still there. So you kind of got a fan in here from the top to the bottom, the breakouts. If you look at this wide one from here, the first breakout to here, this is a fan. If we break up here, I think the oval is up here to the upside, so we're going to do an oval. And I'll show you that, and I'll break it down with the volume profile end of the video so everybody can watch. I don't want you to guys run away in the first 5 minutes. And this oval, we're going to remove it and put it to the right side. Remove drawing. Okay, we're removing it. And we're going to put this oval down here on the 50 SMA in that bottom channel of the 2890 area. If this area is lost, be careful, because this way may end up getting us back to the 38.2 fib. And what I'll do, I'll put an oval right here on the 38.2 fib as well. So my goal is to go higher, not to go lower. Okay, everyone? So that's the S&P. Let's take a look at the NASDAQ / NQ. We should remove this one out of here before I move over. Remove drawing. Okay, remove that one over here. Move this one here. Just trying to clean up the charts so you guys learn how to do that on your own at the same time. Let's do NQ. Let's just zoom down first before we start doing anything else. The NQ is in a similar situation as well. It was a little bit weaker because of the tech sector the last couple of days. It came down. You see it in a downtrend. What we can do is draw a channel up here, move that 50, that oval, and put the oval on the right side, because this is a very critical area. That's the 50 SMA, if you notice it, and that's around the 61. If we lose the 7400, I think it's going to become more weaker. We may end up coming back to this oval down here and as a target. But what I'll do, I'll remove this oval, move it to the right. So we'll just put this down here. So in case the market does tend to go the other direction, we know what to look for. And remove this one out of the area. Remove, and we remove the bottom one. So I'd like to see still to the upside, breaking out of this channel, breaking the 50 SMA, and our target is basically up in this region. We'll put a little oval here. So, and we're going to do a channel on it as well. Grab a channel. And this candle from here, we grab it, we connect it to this. This is an up channel. Remember, we do have one from here. You can do one like this, a symmetrical triangle, grab one from here and do it that way. See, you can do a wedge. If we break this area here, look to the downside. If we hold it, look for the upside and break out of this one. Or you can do one from here to this candle here, which is, the bottom wedge of this one. Because remember, this may hold this area here and go back up. So, but I'm thinking as long as we're above the 7400, we are bullish on the NASDAQ. Let's take a look at the RTY. I'll use the small cap. The RTY is a little bit, this is the volume open interest. We can remove it, edit open interest, because sometimes it shows up on the studies. What you can do is go show study, uncheck it, save as default, and you apply it, it disappears and no longer there, the open interest. Okay. Here we go. We are in the same situation on the Russell, but the Russell, that 1500 is being an area, we were battling between 15 and 1600. We went a little lower. We bounced off this oval. We're coming back to that 50 SMA. In this oval, we're going to keep it there. All we're going to do is extend it to the right. And if we break, or if we stay above that 1528 area, it's going to be more bullish to the upside. And what I would like to see is that the Russell come back to the 1600 area here. We'll put an oval here, and we don't want to break below the 1510 area. Okay, everyone, 1500. So in this one, we can remove it. So this is the Russell. Let's take a look at the Dow Jones Industrial Average, which is a more of a 30 company / YM. To the right side. Okay, this is the Dow. The Dow is a little bit more on the upper level of this consolidation, because this was the original, breakdown. We came back to it, remove drawing, because I do always keep those gaps around myself. Remove drawing. There's this oval, which is no longer going to be valid for now. Remove drawing. I'm going to remove that one. We're going to extend this one to the right side in case we fall through. We're going to have the oval right here on the 38.2 fib. So that's 26,700 area. This oval, we're going to extend it to the right side, but I'd like to see the upper target of it because this is the channel that we're going to break out of. I'd like to see the Dow in the 26,500 to the 600 area. So what we do, we create an oval right in this area. That's the upper target. We're going to draw a channel on it. Okay, everyone? We're going to grab a channel. Do the same thing. We can do one to the downside, but I'm going to do one to the upside from here. There's your first candle to this one up here. As long as we don't break this channel and we don't go below 26,100, 2600, we're going to stay bullish. And to the upside, we grab this one to this candle here. And if we break above it to this upside, we're going to head up to the upside as long as we clear the 26,300, 2690 area. Okay, everyone? So that's the Dow. Let's take a look at GC. GC, I think, is a little bit extended gold because of that last push that we had, the fear gauge, everybody pushed gold a little bit more than expected. We had that rounded bottom. We created a cup. We got a hanging man, it got pushed in the overnight action, got dragged back down. This area, if it's not going to hold the 1350 area, be careful of it coming back to this up channel where it broke out of original first move and come back, because you can have an up channel from here this way drawn up, or this one from here to up here. So we have a fan. So what I would do, these channels are no longer valid. We're going to remove drawing. I kept some of them on to show you how to draw wedges and channels in order to keep you in line with each trade. Remove drawing. I'm gonna keep that one so everybody understands what we're doing. So what I'd like to do, see this channel here, we got an up channel from here. We can grab this nearest low to this nearest high. This is the up target on it, and we can grab this nearest low here to the nearest one here. This is a wider cone, if you noticed, between this one and this one. And what I'd like to do is draw one which is from the nearest point here to this one here, which is very, very steep. If we lose this area, okay, everybody, the 1337, we're going to do an oval on it. If we lose this area, look for the 1325, 1330. This is if we lose this area here, everyone, okay? We can come back to this one down here. I'm going to mark it with the 38.2, remove drawing, and that's the 38.2, and the 18 SMA will meet very well. This would be, your first trial for taking a bounce on gold for the upside. I think it's a little bit extended gold at this point, and I would watch my fingers, being longing gold because it lost the 1350. Okay, everyone? So that's gold for you. You can see that roundness. And if I go to the weekly, just want to show you something on the weekly before I jump ship. See that roundness? This is the cup of it. It may consolidate back down here to continue higher if this goes straight up, because you got a doji here on the weekly candle. I myself think that there's opportunity. You're not first time on the door, second time, third time, fourth time, which we missed. Fifth time, it opens it to the upside, but I'd like to see a little consolidation before the move higher in gold, okay? I'm not trying to be bearish. I'm just trying to show you the setup. Now we go to CL, which is oil. I do have the weekly. Everybody's, thinking this is going to create an H and fall through the 61.8. I think if the 61.8 holds here in the 50 range, which is a double bottom, and we clear the 54.50, 54.75 area, we can come back to the 38.2, back to the 60. This is how I look at oil. And if you notice, if we put a line in the middle, this is your mid channel that it missed, because between this area and this area you have a midline here. You hit around the 38 or 61.8 and coming back up. Let's go to the daily and take a look at the oil. of the crisis that's happening in Middle East and Asia and all that, everybody's dragging oil around. I would consider this a double bottom. It's forming a wedge. What I'd like to do is grab a channel up here. We'll create the ovals at the end. Let's do a channel first. We'll eliminate the other one. Grab this candle here and draw a channel to this one. If you are this one right here. I want to make it a little wider so everybody can see it. Okay. If we stay above this channel, because these are parallel, we don't lose the midpoint of this area here, which I'm going to mark with an oval. We're going to start cleaning the chart up a little bit more. This is the area that you don't want to lose, okay, everyone? We're going to highlight it. This is the middle range of these two channels. I'd like to see the upside of the 54.75 clear in order to become bullish, because if you clear the 53.50, this is going to become bullish. That's your 18 SMA, and eventually get to the 38.2 fib and the 50% fib on the down channel of that move. Remove drawing, and what I'm going to do is highlight this one a little bit wider with a box. That's our target to the upside. I know everybody think I'm crazy being, on oil sector bullish, but that's what I'd like to see. Okay, we mark it with a box. Okay, so if we clear this area, we clear the 34 area, 54.75, 54 area. I think in the 18 SMA, I think it has potential to the 38%, and the 116 SMA, which is around the 58 area range. I'm not trying to be super bullish, but if the trend does hold and we do not lose the 50 area and come back to that support, eventually we'll fall to here. If not, I'd like to see the first target here, second target is up there. I am a little bit more bullish on oil. Let's take a look at a couple of equities. I'm going to start with my favorite one, Tesla, which we called a couple of weeks ago in the room around the 180 area, 178, go long Tesla. We came down to this area, we pushed back, and we got most of our positions out of it around the 220 area. Some people are still holding a small position in it. I am out of it because I wanted to see, the reset come back to the 116 SMA, the 200, which it never got to, and go back up from that down channel that I had on it to come back to the 50 SMA. The real target, if you clear the 232, it's going to come back up to the 61A. I'm going to move this oval out of here, remove drawing. We'll put just ovals or boxes on this area. Let's create an oval. This one is a little far away, but I'll just keep the 116 there. We'll mark it around here. It's going to be a little lower. Just mark it a little lower. This one is too far away from this, the resistance. We're just going to keep it away right now. The 300 range is a little too far out unless something crazy happens. If Tesla loses the 210, 205 area and cannot hold, this is your first target to the downside in order to reposition a little trade back to the upside in it. I am no longer in it. Some people in our room are still having a piece of the long from, down here at the 178, 180 area, which is great. This oval is no longer there. We can remove it. We don't have to keep it. Remove drawing. And we'll just clean the chart a little bit more. Let's see what we have. We got this channel here, no longer valid. We'll keep the wide one down there. And we'll get rid of, we can keep those two up here. Okay, so this is Tesla. I'm going to look at Goldman Sachs just to show you guys what's happening in the banking sector. Goldman Sachs, if you notice, similar chart to Netflix, is consolidating in that range, between the 185 and 210. I think if this time it clears the 200 SMA or the 50 SMA and clears the 198 area, I think this is going to be a screaming push to the upside here. And what I'm going to do is mark the 195 area. This is going to be a very critical in Goldman Sachs, to clear. If this is cleared and clears the 50, I think Goldman Sachs is coming up to this area here, which is the 205, 210 area. If it loses that 190 area, there's nothing to support it till the 180. Then you'll try to see if you can get a double bottom on that gap, which they filled here, for a long again in it. Okay, that's Goldman Sachs. So let's go back to the ES because I don't have much to show for the week, but what I want to do is come into the chart looking at the volume profile in order to help you out, guys, a little bit more in detail how to look at it. We're going to go from a daily to a 15-minute chart, 5 days. It's a 10-day range, which is a little bit more time frame. We can go 5-10 days out. I'm going to use a 30-minute bar just temporarily and go okay. We're going to use the monkey toss. Go to chart mode. Instead of standard candles, you go to the monkey bars. The monkey bars allows us to see on a, oops, what did this do? Okay, here because it's a little bit more concentrated, this was the last push up. We consolidated, this is the POC area that we consolidated. We came a little lower, pushed up, came a little lower, closed in this area, pushed up, came a little lower, and the value areas have been building, overlapping to the upside. If we clear this area here, the 2911, 2900, I think the ES has more potential to go higher, and this is why I use the volume profile. If I come in to a faster time frame than a 10-day, 15-minute, and I'll just zoom in like this, and I use a 5-day range and push OK. If you notice, you can start seeing that the volume build up and the gaps every time, like when they pushed down, the puck was here, most value was here. The puck here is neutral, here is neutral. On the day we went lower, but couldn't keep and pushed back up. We closed in this area, and on Friday, the value was lower, but where did we close? Around the 96 area. So always remember that volume has either gaps in it or low pop. There's not much consolidation. When we had a low, poor low, the bears couldn't take this area down. Every time we came down, they pushed it up. We came down this and we pushed back up. And this time we came down, we pushed up. If they were able to take out, the 28, let's call it 75, and keep it elevated to the downside, that would have been more bearish to me. I think they have a better build to the upside. And if we clear the 2900, look for the upside of 28, 32, 28, 29. I said 28. I said 29, 32, 29, 47 to the upside this week, as long as we don't lose the 28.75. So that's very critical. And I hope everybody enjoyed their Father's Day. I know I may have kept it too long. Have a great one, and see you guys next week for the new outlook for the market. And you can check us out at SolsticeATR and Valkyl Capital Research. If you like us, please subscribe. It's a free weekly video, and I hope you enjoy it. Take care.